Dirty dealings, corporate battles, consumer woes. This is Evening 5. Eversendai KWAP bagged 4 new projects worth 5.4 billion ringgit in Saudi Arabia, the UAE and India. According to its filing to Bursa Malaysia, with these new projects, the builder's current outstanding order book rises to a record high of 6.6 billion ringgit. Eversendai said the project in Saudi Arabia, in collaboration with Al Bawani Company, is for a structural steel signature building at the futuristic Trojana ski village, a year-round mountain resort. The project in UAE involves structural steelworks for the Win Al Marjan Island integrated resort development in the northern city of Ras Al Khaimah. In India, its subsidiary bagged 2 structural steel projects for the Rupa IT building and the Rupa Crystal IT building. Executive Chairman and Group MD Tan Sri A.K. Nathan said these jobs underscore the company's strength and capability in securing and successfully delivering projects. He said the group is optimistic that it will be able to strongly rebound as a result of the record-high order book. The stock rose 90% to 39 sen, valuing it at 304.6 million ringgit. Retirement Fund Inc. or KWAP has emerged as a substantial shareholder in CTOS Digital amid heavy selling pressure on the stock following an unfavourable outcome of a legal dispute. Stock exchange filings showed that the fund bought 28.81 million shares on the open market, raising its holdings to 135.51 million shares or a 5.87% stake in CTOS. In a separate filing with Bursa Malaysia, CTOS disclosed that KWAP's fund manager disposed of 1.37 million shares on the same day, paring its shareholdings to 134.14 million shares or a 5.81% stake. CTOS shares slid below its initial public offering level of 1 ringgit 10 sen before cutting some losses yesterday after the market learned of a judge's ruling in a legal dispute that the group is not legally empowered to formulate credit scores, stirring fears among investors that this may impair the attractiveness of its service offerings. CTOS clarified later that it was business as usual, as the High Court ruling did not include an injunction to prevent it from continuing with the said service. Throughout the day, the stock dropped as much as 27% to 1 ringgit 6 sen before ending at 1 ringgit 25 sen, down 14%. Shares of Malaysia Airports Holdings climbed to their highest in nearly 5 years, as the majority of analysts urged investors to continue buying the stock following the revision in airport tax by MAHB. MAHB rose to as high as 8 ringgit 69 sen, last breached on September 19, 2018, before ending the day at 8 ringgit 65. Hong Leong Investment Bank Research is overall positive on the development and maintained its buy call on MAHB with an unchanged target price of 9 ringgit 80 sen. While positive on the impact on MAHB's net profit, Kenanga Research cautioned, however, that the new rate may not be sufficient for it to raise enough cash, given the urgency for expansion and maintenance. It kept the stock on market perform, though it raised its target price by 13% to 9 ringgit. Meanwhile, RHB Investment Bank flagged that the introduction of transfer passenger service charge and higher parking and landing charges were broadly offset by the reduction in the charges of other categories, particularly the international levy in other airports. The House lowered its earnings forecast by 1% to 8% for 2024, 2025 and 2026, but nevertheless told investors to buy the stock with a higher target price of 9 ringgit 67. It said a loss capitalizing mechanism would allow MAHB to recover 90% of any regulatory losses. Bermaz Auto posted a 19% year-on-year fall in third quarter FY 2024 earnings as top line shrank 8.1%, mainly due to lower sales volume and change in sales mix from the domestic operations of its Mazda marque. According to its bourse filing, quarterly net profit fell to 70.5 million ringgit, while revenue stood at 896.51 million ringgit. It declared a third interim dividend of 4.25 sen per share. For the remainder remainder of its financial year ending April 30th, 2024, Bermaz Auto is anticipating a positive performance, as that the automotive segment should continue to register growth, though at a slower pace, due to factors such as inflationary pressures, uncertainties in geopolitical conflicts, and weaker global growth, which will have an adverse impact on the overall local economy. The company added the launching of new and/or new facelift models of the group's existing and new vehicle marques are still very much dependent on the market sentiments and economic conditions then. At closing bell, the stock was unchanged at 2.48 ringgit, giving it a market capitalization of 2.9 billion ringgit. Rakuten Trade expects the ringgit to strengthen to the 4.5 to 4.55 range against the US dollar by year-end, on the back of interest rate cuts in the US and Europe, as well as the improving domestic investment climate. Its head of research, Kenny Yee, is convinced the Fed will have to cut its benchmark rates sometime this year, saying the regional banks are already suffocating. The Fed has kept its benchmark interest rate at 5.5% since last July and is set to meet again on March 20th. Yee is predicting 4 rate cuts by the Fed this year of around 50 to 100 basis points each, with the key rate seen reaching around 2%. He noted that incoming foreign direct investments into Malaysia will also give the ringgit a boost. Meanwhile, Vice President of Research Tong Pak Ling is bullish on the banking, construction, telco and semiconductor industries for the rest of 2024, with the FBM KLCI recovering to 1,660 points by year-end. Top picks among lenders are RHB Bank, Maybank, CIMB Group Holdings, Hong Leong Bank and Public Bank. When it comes to builders, it likes Gamuda, IJM Corp, Kerjaya Prospect Group, Sunway Construction Group and MAHB Engineering Malaysia. As for the semiconductor sector, its top picks are PIE Industrial, Nation Gate Holdings and IT Max System. For telcos, Rakuten Trade prefers Celcom Digi, Telekom Malaysia and OCK Group.